hear birds in the background of this video. Anyways, currently I'm studying gold on the 5 minute time frame, and my trading view is not yet paid for, so pardon me. So, anyways, I want to actually test out a particular trading style on gold. Not anything different from the usual, same thing. I just really want to try it out on the 5 minute time frame to see if we can look for entries on the 5 minute time frame and then see how it goes. So far, let's imagine we're using the 1 hour as our higher time frame to get our directional bias. Yeah. Okay. So this is where our 5 minute time frame is gonna start from, this yellow line. All right. So far the market have been bearish until it swept the liquidity here, and then so that buy. So at this point here, we'll be looking for buys until it fails. Yeah. All right. So now let's go to the 5 minute time frame. All we're looking for is this. I think I have it drawn out on the 5 minute time frame. All right. So yeah, this is it. This is all that we're looking for. Oh, sorry. So this is all we're looking for. So this is for a sell scenario where we have the markets, it's been bearish, something like this here. So yeah, the market has been bearish, then it creates a high, comes down, I think break structure to the downside and creates a liquidity, then come back, sweep the liquidity, tap into our POI, and then sells down back to this low. And the reverse for a buy scenario, the market is bullish, comes down, break structure to the upside, give us a liquidity, and then comes back to sweep the liquidity, then boom. All right. So yeah, this is literally what we are looking for. This candidate's break structure, or not even break structure, but still good. This is a liquidity. So something like this, just wanted to tap into this and then buy. All right. I hope that's clear enough. So if you look at this here, we have this on gold on the 5 minute time. Remember, I said the market was bullish. So yeah, it's created this low and gave us this. Sometimes I like to use this just to confirm if there is a liquidity there. You see, most times liquidity are sitting between internal highs and external highs, or internal lows and external lows. Those are points of liquidity. All right. So here you can see there's a liquidity here. There's another liquidity here. But most times markets don't necessarily need to go for the high. It just sweeps the liquidity, which is the high before the main high, or the low before the main low. All right. So having this in mind, you can see the market came down, gave us this low, then created liquidity here. And after that, it broke structure to the upside. Yeah. Broke structure to the upside one. Then we have another break of structure, which is two break of structures. I prefer to see two or one break of structure, not three. Sometimes if you have three break of structure, when the market comes back to take out that liquidity, the structural liquidity, it might also end up taking out your POI. So all we're looking for is to enter from the other block, which is here. So the market did exactly that. This is a liquidity, but it is too far from our POI, so the market swept it. There was no reaction. It came back here, swept this, and then tapped into our order block. Then boom. If you look at this now closely, you want to make sure your order block is properly drawn out. All right. Although it has been mitigated, but still, we're still going to use it as our order block. All right. So this is on 5 minute time frame. That is the sell candle here before this move to the upside. The market did exactly that. Tapped into our POI and then bought. All right. So the market gave something like a confirmation entry around this region. If you look closely, let me move this out. The market gave us this low, gave us this high, then gave us this low, then gave us this high, then came back to tap into this other block. I'm going to use the 50% of this red candle here. Boom. Either you use that or you use the open and close of this range. But most times you might miss out if you're trying to use the open and close or this. So sometimes just grab the 50% or grab this. All right. This is what we call order block refinement. And then this is your confirmation entry. Then you have your move to the upside. Boom. On confirmation entry, if you're sticking with the original SL, which is here, SL position, you have less RR. And then if you have this is a greedy approach, you have more RR, but I prefer sticking with the original 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 SL. So this is the high it's created. So this is the high we're aiming for. Did the market get there? Let's see. So from this entry, this is about 12 hours. So if you are risking $10 on this, you should be having 120 in return. So the market gave us this high, came back. Okay, gave us this high, rather, this low. Boom. Okay, this was another structure being created when the market comes to sweep this liquidity to tap into this other block and then buy. But instead, so that the market just swept this liquidity, did not necessarily reach this low. This is while we are buying, the market is creating more structures for us to look for more buys. We're not looking to take this sell. This is a sell here. But we're not looking to take this sell. Why? Because the market is bullish and there was no proper break of structure to the downside here. If not, this would have been another clean entry. Now you have this. You have your other block from here. Boom. Market didn't even get there actually. So let us stretch in to see. Yeah, the market didn't reach. For those who trade QMR, sometimes I like to use QMR. They would have caught this trade. But this is a counter trade, so I would prefer to avoid it and just look for trades in line with the trend. The trend is bullish, so we're looking to buy alone. So you can see that the market initially actually got to our take profits. This is the high it created. Market came, reached all this high, came back down, did all its thing, gave us another bullish entry here. Actually, so you see it's created this high, then created this low. So the market did the same thing, came for this low before the main low on this particular 5 minutes time frame, tapped it using this other block, and then boom. So you can see that you have like two entries just within. Okay, this is our first entry. This is a confirmation entry. So if you're looking to take either the risk entry without confirmation, you would have had 7 RR, which is from here, the entry point to the high. If you're going to use a confirmation entry, you would have had 12 RR, which is to the high, and then this also last is now about 6.4 R. All right, so then the market did that, gave us the high, and then we had a news, boom. So the market came down and then gave us a downtrend because it violated all this low. All right, it now gave us a downtrend. So what are we now looking for? We're looking to short the market. So at this point, you can see the market did not give us any clean structure. We had this high, we had this low. This is the low before this main high, but there was no clean breakout structure. This is not good enough, so I won't look to take that. All right. On this market, you can see we have a good breakout structure to the downside from here. We had this breakout structure, all right, and then we had only one. This one wasn't taken. But then what do we see? Let's use this. So you can see that we had this high, then we had a break, then we had a liquidity target here with the market came, so let's tap into this POI, and then boom. So you can see this, the market swept this, and then sold. This is where we're going to be entering from. This would have been a missed entry if your broker gold spread is not that tight. So boom, we aim for this low. This would have been 14 RR. Yeah, we smashed TP actually. We got TP, that's if you had been tagged in, which would have been most brokers won't tap you in on this trade. Most brokers will not tap you in on this trade. But if the spread is tight enough, then you'll be in for a very, very good RR. This would have been a very clean trade. Alright, so we had almost the same thing here. We had the sweep of liquidity. We have this high, but the market did not get there, so there is no entry. So we look to take the same thing as the market is trending downwards. We look for the same setup, and then boom. Here, let's see that the market targets anything or did it hit anything before this reversal to the upside. Let's make this 2. And then let's see if the market actually tapped into anything before this reaction to the upside. Did it? Alright, this is it. So the market didn't actually hit or take anything. Okay, it was just reacting to this FVG. But there's an FVG here. The market tapped into it and then went bullish a little bit. But remember, we're still overall bearish until the market comes to take out these lows. Alright, we'll look for reactions from here. But then let's see what we have. Let's go back to the 5-minute time frame and see what we have. So on the 5-minute time frame, from this standpoint, we can see the market gave us this low, then created a liquidity, then broke structure twice to the upside, and gave us a third break of structure, which I don't like to take sometimes, but this is looking good. So I'll wait for the market to come, sweep this liquidity, tap into our POI, then buy. Yeah, it came, just swept this liquidity, but didn't tap into our POI. It didn't actually sweep the main liquidity before this, so there was no entry here. And then boom, we have the same thing here. The market created this high, created a liquidity here, which is a bit far from our liquidity and our entry points. So we'll wait for the market to create a liquidity closer to our entry, which it should sweep, and then buy. So we have just one break of structure here. So the market came down, gave us this low. After this break of structure, you can look at this here. I have a break of structure here. So the market came, engineered the liquidity, then came down, swept it, tapped into our POI, and then boom, sold. We aim for this low. This was 4R. All right. So that's the same thing. We just keep on looking for the same thing. Here we had a break of structure. Let me take this away. Have a break of structure here. We have our liquidity here. The market should sweep this liquidity, tap into our POI, and then sell, but it didn't get to that point, so there is no entry. Now on this one here, as you can see, there is no liquidity before this tapping into the order block here, so there is no entry, except if the markets have done this, then come back to create, use this as our liquidity, tap into this POI here, and then sell. All right, so this is my trading style, just that I'm trying to implement it on gold for the 5-minute time frame and see the win rate. Let me see how it's going to be. Remember, we're bullish, we're bearish on gold, so we're not looking for buys. But just in case you want to take a buy from here, you can see that there is no clean breakout structure, or even though you use this as your breakout structure, you would have gotten an entry here. So this is actually a bit far from our POI, so overall I'll avoid this trade. Market does this, taps into our POI, boom, then it buys. All right, so let's see. If there's no clean, this okay here. You can use this as a breakout structure, but it's not clean enough for me. All right, and then buy. Took out this high because we had a minor counter structure and counter trade here. So market keeps on selling until we had something here similar, but there is no liquidity. So here we have a liquidity. Let's confirm. Boom. Yeah, we have a liquidity. Not that clear, but still good for me. So we have this POI. The market broke structure 1, broke structure 2, and then here it's just full of wicks, although it looks like 3 breakup structures. Let's see. So we have 1 break, 2 break, and then 3, which is rough but still good. So if you're looking to take this trade, this is going to be your liquidity, or you use this. But for me, this is actually clearer, but it's a bit far from my POI, so I'll look for this high before this. So the market came back. See, after coming here, it's created almost equilibrium, equal highs, but then looked at if it was selling. People would have panicked and enter from here, but patience, wait. The market came back, tap into our POI, and then boom, target this low. This would have been how many R? This would have been 11R. All right. So then the market gave us a confirmation entry here. Remember, a confirmation entry is you looking for the same thing within your POI. Maybe let's say your POI is panning from here and you're looking to sell. You just want to see the market create the same structure. All right, the same structure here, whereby you have something like this. Okay, yeah, a breakup structure to the downside. Okay, sorry, there's a bullish structure I'm drawing. When I see the market create the same thing, high breakup structure, then your liquidity, and then boom, the market should come back, strip this liquidity, tap into your this, and then sell. So this is what you want to see within your POI. The market should create this within your POI. All right, this is so this should be within your POI like this. So that is exactly what happened here. After the market tapped into this POI, you can see, let's move this out of the way. The market came, gave us this low. All right, after this one. So what are we expecting? The market should come, split this high, tap into this, and then boom, which is exactly what happened. Right? Then how many RR did this give? This gave us 6R. 6R. Boom. Smashed TP here. Then we have the same thing here coming down. See, we won't have another one here, but the market did not come back to this high. Came down here. Let's look for this. So yeah, we have this as our liquidity. Let us see. Yeah, this high. So what do we see? The market broke structure 1, broke structure 2, which is good. Swept this high, tap into this, boom, sold. Remember, we're bearish, so we're just looking for entries on the 5-minute time frame. All right, same thing here. Market gave us this high. All right, broke structure to this side. It's created this liquidity before breaking structure, so we have one break up structure. Market came back, swept this, tap into our POI, boom. How many R? We have 6.2 for 3 R. All right, same thing. We just want to see the market creating. We have this high, we have this low. We want to see the market take out this minor high before this, but the market did not get there, so all good. Same thing here. This high, this, flip this, tap this, but the market didn't do that. All right, until the market came to this low. All right, so let us mark this low. Let us see what is on the other side of these markets. What do we have on the 1 hour time frame? The 1 hour time frame, what can we see? Okay, so the market had swept this low and then reaching into this point. All right, so let us see. I remember this is a low before the main low, so this is a liquidity. Once you see the market sweep this liquidity, tap into a POI for me and then look for buys. So then go to the 5-minute time frame to look for same thing on the 5-minute time frame. So since the market has swept that low, we want to look for buys. We want to look for buys. So after the market swept that, now let us look for buys. Let me remove this. Same thing. Have a low, the low before this main low. All right. So the market came, swept this low, tapped into our POI, and then boom. What are we looking for? We're looking for this high, this liquidity, not this one. Because remember, the market is overall still bearish. We want to see the market maybe take out that low or confirm and break this high. Then we'll be sure that okay, yeah, the market is buying now. All right, because it's already swept that low from the 1 hour time frame. Remember. So what do we see? Same thing. Strip this low, tap into this high, then boom. Remember, we have one break of structure, two break of structure, so two internal break of structures. Market tapped into our POI, consolidated for a while, gave us another confirmation entry. Use this as liquidity. This was a break of structure tapping. Here we have 7R. Here we have 7R. So then you can see that the market actually swept the high. This would have been a failed trade if we were trying to sell. Break of structure here. Sweep of this liquidity and then our POI, the market would have taken us out. Although we had a little reaction, but it stopped here. It didn't actually take out this low. All right, so this would have been an SL. We had looked to take that. So now we can confirm that the market is bullish. Boom. Now what do? We look for buys. Same thing over and over again. The low before the main low, the market didn't get there, so no problem. We don't force the trade, we just follow the trade. All right, so the market came to this point and then boom, we had a leg that looked like, oh, the market is selling again. So what do we wait for? Looking for this pattern. There was no entry anywhere here. There's no entry. There's no entry. There's no entry. Came down, took out this initial low that it created. Okay. Now what are we looking for? Let's see what the market is trying to do. Let's understand its intentions. So the market gave us this high, and then note here we have this low before the main low. If you were using this low, you would have got into this trade to look for buys because we have a breakup structure to the upside here. All right, so this is it. It's a clean break 1, break 2, strip this low, tap into your POI, boom. You would have been in this trade. But I might have been looking to catch a sniper entry from around here. Maybe I would have missed this trade so that my POI can be a little bit smaller. I would have missed this trade. But anyways, let's move. Boom. So now we're looking for buys because the market is bullish. We look to take the same structure. So this would have been where we didn't have any trade. Now let's look at this. The market is bullish. You see this low and then this low before this main low. There is no proper break-off structure here. There's no proper break-off structure. So if you are taking this to buy from, the market would have taken you out. Boom. All right, because there is no clean break-off structure to the upside. Now, what do we look for? We look for our setup, but we must have all our criteria met. Okay. Selling. Here this looks good. Market broke structure 1, broke structure 2, created this low. Market should sweep this, boom, tap into a POI from here, and then sell. Unfortunately, this is one of those days where if your SL is tight, you would have been taken out. So, boom, came to this low. So let us see. If your SL is tight here, you would have been taken out of the markets. Yep, boom. And this would have been a 5-hour or 6-hour trade. Okay, let's make it 5. I get this low. So that would have been a 5.7 or 8-hour trade. But then, boom, the market did this thing. And we move. We look for another setup. All right. So, what do we see here? Boom, 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 boom. Boom. Nothing. Nothing, 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 nothing. So that's just it. This is on the 5-minute time frame, and this is July. So this is this month. This month, I just woke up and I was hungry to trade gold, and I was like, let me test out my setup on the 5-minute time frame. And last month, this month, they have been good entries. So currently, I'm on this trade, and this trade is running. I shared this trade live for my team on Telegram. So boom. Now let me run you through this trade quickly. All right. On the 4 hours time frame, I had a trade entry, but it was a missed entry. So let's see how it goes. Okay, so this is the trade. The same thing. The market created this low before the main low, so I expected the market to come here. Although I was greedy with this trade, so my POI was too tight. Sorry, my screen is a bit rough right now. It's because I've been back testing, so I've drawn a lot of lines. All right, so if I was looking to take the trade from this other block, you see I would have been tapped in, which would have been a sniper entry. And what are we looking for? We're looking for this high. So definitely gold. My overall target is this high. But this is on the 4-hour time frame. Yeah. All right now. So let's go back to the 5-minute time frame. Since I missed this entry, I look to take continuation trade back to this high. But remember there will be obstacles here on the road. So anyways, let's go back to the 5 minutes. Let me show you guys. Now, remember the market broke structure, boom, to the upside, yeah, gave us all these. But then it created this low before this main low. So I was like, okay, this is going to be a good trade. So then I saw this late. So I entered based on a late entry, right? Because market had already tapped. Then came into this other block, tapped, and then stepped by. Now, look at this trade. The confirmation here, the confirmation entry I used here is this particular engulfing candle. This engulfing candle. All right. This is engulfing candle as our entry points. This engulfing candle as our entry points. This one. All right. So let's see if we get a break of structure to the upside, then we know that okay, gold is gonna move. The buy is gonna continue. This is where I'll be looking to confirm my break of structure. No, this. If the market clears this, and that oh, we are Gucci, we are good. Now instead of looking for where the 4-hour time frame is going, I'm going to be taking my take profits here. Why? We have this high as the high before this main high. So you can see there's probably going to be a reaction when the market sweeps this high. There's probably going to be a reaction where we might see the market sell down, maybe even take out this low. I don't know, but the market is going to do its thing. There's probably going to be a sell around here, so I'll just look to take this out. So this is around 5.6R. So let's see how the market goes. Let's see what happens. So this is it, guys. This is my trading style on the 5-minute time frame. Peace out, guys. Oh, it's almost 30 minutes. Thank God the video is not too long. So yeah,